Ladies and gents from around the world, let the fight begin. Okay, we only have 1 week left before we get into trading with real money, guys. I'm excited and hopefully you guys are as well. So I wanted to ask you a really good question. Take a look at this boxer here on the left side right here. The question is, have you ever been punched in the face? I mean, as children growing up, I'm sure a lot of us got into scraps with the other kids in our neighborhood or at school. I know when I was 10, I was bullied by another young person my age, and I know I was punched in the face and bloodied, and I'm not too sure why that happened. I'm not even too sure what the fight was about or why he even punched me in the face. But anyways, it happens to a lot of us when we're growing up. So boxers and traders are punched in the face all the time. They both get knocked down, get up, continue fighting, and get punched again, knocked down, get up, and the process continues over and over again. Boxing and trading are brutal sports for sure. There are few winners and lots of losers with massive bruising, black eyes, blood, and they're often damaged beyond repair. So get ready, traders. Not only for men but women as well. I'm speaking to both of you. And there's only 1 week left before we get into the boxing ring and start trading with real money. Now, will you survive? In this video, I'm going to give you the trading rules to help you survive the real fight with real money. Pay attention. Okay, this is me, guys. My name is Martin here. I'm a proud Canadian trader, and I started providing last year the ABC free Forex signals, which I'm going to give you as long as you're a subscriber. So if you want to get my free Forex signals, all you have to do is send me your email address, okay? And you would send it to right here, mskyj007@gmail.com. I'll have more information on this later on in the video, but the only way I do send out the free signals is by email, so you will have to send me an email telling me that you want to receive the free signals, okay? Before we start looking at this past week's results, the trading results, and they're all winners, okay? So we're going to look at the charts in just a moment. I have my humble disclaimer, and again, this is really important, especially when we get into trading with real money after next week, okay? So first of all, my free signal service is an educational program only. I'm not trying to give you any investment advice. I'm just trying to teach you how to trade properly. Don't blame me if you lose all your money. You probably weren't paying attention to what I'm teaching you, and you're not following my instructions. Remember, for now, you're trading on a demo account. That's up until next week when we start trading with real money, okay? And in the meantime, just trade with a maximum 1% risk of your account balance. Okay, so simple disclaimer. Hopefully you understand that and follow that. Now, last week, guys, was a really interesting week. We had 2 new signals. I sent them to you by email, okay, and both were winners. You can see that right here on March the 15th, okay. I gave you a signal to buy the New Zealand JPY, okay, Japanese yen. This was a winner. We ended up making approximately 51 pips, and it did reach the second take profit target. So that's really good. March the 16th, the next day, I sent you a signal by email again, and the recommendation was to sell the Euro British Pound. It was a winner again for approximately 32 pips. It didn't move a lot, but it did reach our first profit target, so that was really good news. To all combined, for the 2 trade signals, we did make 83 pips approximately, okay? So that is terrific news, guys, and we're going to look at the charts of these trades. It's really important that you understand what goes on. And the very first thing, guys, on March the 15th, we're going to get to the chart in just a moment. It was a buy signal by the New Zealand versus the Japanese yen. And when I do send out signals, by the way, this is the exact copy of how you'll be getting the signals. Okay, you can take a look right here. So you can see here, it was a buy New Zealand Japanese yen. Okay, and I do give you an entry. The buy was at 78.51 or better. So there's the entry, 78.51. And better means in case price goes lower first, then enter a buy trade at a lower price. So what that means simply, if this is your entry right here, 78.51, okay, then you're waiting for price. You can, if you want, you don't have to do this. I mean, you can always enter a trade right away, but you can wait till price comes down lower a bit first to another lower, better price, and then enter a buy trade here, and you'd be making some extra pips rather than just entering the trade right here at this level. Okay, so that's what we mean in case price goes lower first, then enter a buy trade. Now, I do give you the stop loss right here, 77.59. Later on the next day, March 16th, I asked you to move the stop up higher to 77.86. I did give you a first profit target. I did give you a second profit target, guys, and I also gave you further instructions to move the second take profit target to lower to 79.03. That was on March the 18th as we see price evolve. Okay, so all you have to do is follow my instructions, guys. It's the easiest thing, and you don't have to learn anything further. Just follow my instructions, learn the process, and you're going to make money along with me. So I'm excited that you're following in my footsteps, and we're going to get started with real trading in about a week's time. Okay, so take a look here, guys, and now we're going to go to the chart, and let me just open that up. Okay, so you can see this was the buy New Zealand Japanese trade. Okay, and the entry was right here. Let me get my drawing tool. So you can see right here on this candle, there's the signal, guys. I asked you to enter a trade. The next day, it retraced back a bit. This is what I call a resting candle, guys. It closed. The close of this candle was within the range, the high-low range of the previous candle. Okay, so that's what I mean by a resting candle. And often, right away, price will continue in the same direction. So you can see we were in an uptrend, okay, and making higher highs, higher lows from the previous low, okay, and I expected price to continue higher. This is a resting candle, and indeed it did. From here, it went all the way up to here. The high of that candle was, you can see this upper line or the upper shadow or wick as it's known. It did reach the first profit target of 78.83, okay, after this candle. And then the next thing, guys, I said to what you would normally do is move the take profit, the stop loss, which is here. You can see 77.59 up to the break even, okay? Which would have been right here. Now, on this next candle, on the second last trading day of the week, you can see price went all the way. You see this line right here, all the way up to 79.13, which is the second take profit. However, it did not quite reach it. But the day before, I asked you to move this second take profit down lower to 79.03. And you can see this candle right here. The high of this candle did actually reach the new second take profit target. So this was, like I said, a really good winner, guys. Okay, so congrats to all of you who took this trade. Okay, now let's move on to the next trade. Okay, on the next day, guys, on March the 16th, I sent you an email saying sell the euro against the British pound, guys. And here is the entry. You can see these are the instructions from and a copy of the exact email I did send on this day to all the subscribers. The entry you can see right here, sell at 0.8567. or better in case price goes higher first this time, right? And then enter sell trade at a higher price. So again, we're looking for a sell trade, okay? And here's our entry right here, 0.8567. So you can wait after getting the signal. You can always wait to see if price goes back higher, get in at a higher or a better rate, okay? It's at a better rate than the one I posted, and then look to sell, okay? So that's what all that means. I do give you a stop loss, in this case 0.8633. Later on March the 18th, I did ask you to move your stop loss up higher after it hit the first profit target. And here's the first profit target, guys, the second profit target. The only important thing, and this is, you really have to remember, once you place the trade, please place in your stop loss, because you need to manage your risk right away after you enter a new trade. And then the next thing you do is enter your first profit target. If you're splitting your trade in half, and you can get more information right here below what that means. If you're taking this trade, the sell euro British pound, you could split your trade in half. On half the trade, you do not put a take profit in, okay? And the other half, you do put the first take profit. So one half would hit the take profit very quickly. It's a conservative take profit, so most likely it's going to hit the first take profit. And then the second half, which does not have a take profit level, then that would keep running. So if price keeps going in our direction, then you would be making a lot more pips, okay? So that's what we mean by that. And we're going to look at the charts now. The chart for the euro British pound, here it is. Okay, so on this day right here, guys, okay, let me just do this. Right here on this day, you can see, okay, there was the signal, okay, and you can see this candle had a tall upper wick here, indicating further downward movement. The entry was right here, 0.8567, so that means you entered right here, okay, right here. The next day, it was a kind of a doji. Price went up quite a bit, price went down quite a bit, but then ended up being neutral. So again, price going sideways, okay? And then the next day, price went down here, and with this lower wick, it did reach our first profit target, 0.8534. You can see that right there, okay? So good news, after 2 days, it did hit our first profit target. Again, another winner. Again, congrats to all of you who took the trade, and this is what we're going to be doing. We're going to continue the winning rate when we start trading with real money in about a week's time, okay? So at some point during last week, I did pose a very important question. We're going to look at that, and it was about quiet markets. I asked you guys to all look at all the charts to see if you could see if you can get clues to the markets going sideways or retracing. And you can see here, guys, this complete right here. Look at all the sideways candles, up and down dojis, really going nowhere, okay, after this big black candle. The price just didn't go anywhere, and now it's gone up on the last trading day. So this is a price pattern of a sideways market. You can see a lot of retracement candles, well, or candles that go up in one direction, like this big one here, and then come right back down. So these are all clues to a sideways or quiet market. I asked you, how does that affect you as a trader? Okay, so we're going to look at the answers, or my answer to that particular question in just a moment. Okay, so let me take that off. Let's continue. Now, we're going to get right on to the mini lesson, okay? And that was the question here. When I do send you the emails with my signals, sometimes at the bottom I have a section called "Send Me an Answer." That's where I will pose a question, and I would appreciate as many of you answering as much as possible. It helps me understand where your mind is at. It helps me understand, how you're doing in trading in general. If you're following my signals, it gives me the feedback. It helps me as a teacher. Honestly, guys, when you respond to me and answer my questions. You're engaging with me. I'm learning from you. I'm going to become a better teacher, and this is going to help all of us. Okay, so the question was, did you have a chance to look at many currency pairs yesterday? I think this was on a Wednesday that I posted the question. Did you notice how most pairs just moved a little bit and even retraced? In other words, the markets were quiet and price moved well below the ATR, the average true range. Okay, so what does this mean for traders? Okay, and that was my question. We're going to look at the way I would answer and the information that is really important. Now, most of my questions and everything I ask you to do is all relates to my free Forex signals, what's really important as part of that program. I'm not really much interested in extra technical or fundamental analysis. And with that said, you're going to understand what I'm talking about. So when I asked you to look at as many pairs as possible, here's a huge tip, guys, right here. Look at the same currency groups to reveal important information. So, in other words, look at all the Japanese pairs, okay? So the Japanese currency trading with the other currencies. Look at all those pairs. And then separately, look at the British pound pairs. Look at the Audi pairs. Look at the CAD pairs. Look at the USD pairs, okay? So when you do this separately according to the currency group, you will reveal some amazing information, some correlations, and when it comes to technical analysis right here, okay, because we can look at and gather information from both a technical analysis point of view and from a fundamental analysis. So many of you answered me, got back to me, gave me some feedback, and basically you can understand by looking at the different currency groups, you can understand market volatility in general. You know, are the markets very volatile? Quiet markets. So when you look at, let's say, all the Japanese pairs, you can maybe determine that the markets are sideways, they're quiet. When you look at these same currency groups, you can confirm often trends that are continuing. So, for instance, the British pound pairs, the trend is going, like British pound is strong, and so the trends are according to the strength of the British pound. So you can confirm trends or trends that are continuing or even retracing or pullbacks. So when you look at some of these, let's say you see all the Audi pairs, you can see Audi was getting weak and then they were all pulling back regardless of who Audi was trading against, you know. And you can see pullbacks, retracements. You can also see often when you look at it, many currency charts, you can see price patterns. You can see prices converging within a wedge or triangles or flags forming. Okay. You can also see price at support or resistance levels. Okay. And you can gather for sure individual currency strength or weakness. So let's say if you look at the CAD pairs, okay, and you look at all of them, who CAD is trading against, or which currencies the CAD is trading against, you will see that the CAD is either strong or weak. Okay, and that's the importance of looking at the currency groups. Okay, and so that is what I was getting at when I asked you to look at the currency pairs and then looking for weakness in that. You know, and asking you about sideways markets or quiet markets, I'm really asking you to look at the currencies to see if you can spot any type of correlation. And a lot of you people who gave me answers based on some of the technical analysis, but other people who responded back to me gave me information based on fundamental analysis, which is really interesting as well. So you guys talked about important news event, and you mentioned that the FOMC was coming up on the Wednesday, and so on Tuesday, the prior day before, the markets were very quiet, and that was one of the reasons because, you know, before a major news event such as the FOMC, the markets are indeed quiet. So you are correct in that sense. You talked about dollar strength. Often, depending on how the dollar is, the other currencies react to it. Talked about bond rates, that affects currency rates as well. You talked about risk on, risk off. You know, were people buying stocks and other risk assets and everything else, or non-risk assets, and that affects the currency pairs. Some of you talked about correlations to gold and oil. So when gold goes up, certain currencies go down, right? And when oil goes up, other currencies react to that as well. So sometimes, you know, like the commodities like gold and oil, affects the countries like Australia and Canada and that. And so some of you were commenting on correlations and also world anxieties over things like the pandemic. So there obviously is a risk factor during these crazy times, and also talked about threatening nations and war. So all of this under the heading of fundamental analysis also has something to do with quiet markets or volatile markets. But the main thing, and this is my big answer, guys, what's wrong with all of this? What's wrong with all of the above here? Okay. You know, I'll give you a second to think about it. It's great that you know about some of the technical things that can affect currency. It's good that you know about fundamental reasons why currencies are strong or weak. But there's something wrong with all of this, guys, and this is what it is, okay? There's everything wrong in the sense that this is what other online experts want to teach you at extra costs most often, okay? So there are lots of gurus and experts online. They want to show you how knowledgeable they are, and they want to tell you how important it is to understand all of the aspects of technical and fundamental analysis. But like I said, there's a major problem with all of this. All of the extra technical and fundamental information are giving you layer upon layer of complex analysis, right? So these are extra layers that you have to think about. And when you add layers to your anxiety, this leads to unnecessary and conflicting decision making, right? Okay. So have you ever heard of the phrase analysis paralysis, right? Okay. And what I'm trying to do with my free Forex signals program is to help you avoid from being punched in the face, because the more you know about technical analysis, the more you think about fundamental analysis and what makes price go up or down and all that kind of stuff. Guys, you're going to be punched in the face all the time because these are just extra layers of anxiety that you really don't need. You need to shield all of this and avoid being punched in the face. And I want you to start punching back and be a winner with my free Forex signals, where we mostly ignore all of this, okay? And that's important. If you guys are new to this channel and you're watching this video for the first time and what the free Forex signals is all about, I'm telling you guys that we avoid all of this for the most part, okay? Now, getting back to the basic, which is the mindset. The most important aspect of trading is your mind, guys, and just take a look here at this trader thinking about overconfidence, fear, greed, anxiety, fear of missing out on a trade, doubt, nervousness, right? Well, aren't these all aspects? They all deal with psychological issues, guys, and you're going to get punched in the face when you're faced with these issues, right? So to help with a smooth transition from demo trading, which we've been doing for the last few months, into real money trading, which starts in about a week, I need you to follow the rules, guys, and that's what we're going to do next. We're going to get right into the rules, okay? So let's take a look. First of all, take a look. Here's a happy female boxer. She's happy because she's gotten over most of the psychological issues, and she's protected herself well, and she knows she's going to win the big fight, which is when we start trading with real money. So these are the ground rules. Pay attention. For each trading week, okay, every trading week, I want you to here use the position size indicator as a reference to give you the correct lot size. It's on your charts. It sits usually in the bottom left-hand corner or wherever you want, but use it as a reference to give you the correct lot size. Now, some of you or many of you, maybe with a real money account, it may be very low, let's say $500 or less. So most likely you're going to have to be trading with micro lots anyways, but at least you can use the correct, the position size indicator, which sits on your charts. Look at it. It tells you the correct lot size, and just use it as a reference. You can use it or less. Go down to just single micro lots, okay? If you have very low money in your account. For those people who have a lot more money in your real trading account, then definitely you need to use the position size indicator. If you don't have it, guys, email me, let me know, and I'll send you the link for the position size indicator. But that's one of the rules. That's one of the ground rules. You need to use this indicator and refer to it all the time. Next, you can trade with a maximum 1% risk lot size per trade. Okay, so for each and every trade, maximum 1% risk. And if you're splitting your trade in half, then it would basically be a 0.5% risk on each half of the trade. Okay, but 1% maximum risk per trade, and you're going to get the information using the position size indicator. Okay, now next, you can only have up to 2 open trades at one time. Like in 1 week, you can only have up to two open trades at one time, each with 1% risk per trade, to a maximum 2% risk for in total for both trades. Okay, so if you have 2 trades open, 1% for each trade, that's a maximum 2% risk. I don't want you to risk any more than that, especially in the first phase of trading. Okay, guys? So this is an important rule. I need you to stick to that. Next, you can take a new trade. If, let's say, a third trade comes along in the week, if you have 2 trades already open, only when one of the trades has fully closed. So you can only have 2 trades open at one time, and if one of the 2 closes in profit or whatever, or then if there's another trade signal in the week, you can take that next trade signal, as long as you only have 2 trades open at one time. Please understand that and abide by that rule. Conservative traders can trade with 2 micro lots per trade. So if you're splitting a trade in half, each half then will only open with 1 micro lot. Okay, so that's for the conservative trader, guys. And really, all of this depends on how much money you got in your real money account. Okay, some of you will have a lot more money. Others will have very little money to start off with. And I congratulate you for all taking this first important step to being successful trading Forex. You need to trade with real money to make money to go forward. Okay, so we're pretty well finished, guys. If you want my free trade signals, send me your email address. Okay, you have to send me your email address, and in your email address, give me your first name and let me know what part of the world you're from. I just want to know. Okay, and I'll put you on my VIP list. So you send it to right here. You can see my email address, mskyj007@gmail.com. mskyj007@gmail.com. Send me your email with your name, and I'll put you on my VIP list. And remember, the signals I give you are free. Okay, so bye for now. This is me again. Cheers from Canada. Don't forget to subscribe and hit the bell icon below the video. This gets you all the new YouTube videos into your inbox. And again, comment if you'd like. If you want to comment, I'll send you back a comment. I appreciate all comments, and definitely hit the like button, guys. This gives me hope and courage to keep going forward, trading with you guys, teaching you guys, and we're all in this big fight together. So let's all be successful. Bye for now. See you next week.